Welcome to the latest edition of Fitch Virtual Investor Series. I'm Kit Chan, Senior Director, Head of Asia Pacific Structured Finance Business Relationship Management. Today, I'm joined by Hilary Tan, Senior Director, Head of Greater China Structured Finance Ratings Team. She will be sharing her insights on the latest developments in China RMBS. Hi Hilary, it has been a challenging first half of the year for the Chinese property sector to say the least. How has RMBS fared so far?
Hi Kit, good to be here. Let's have a look at the early delinquencies. In this chart, you can see that we have not actually seen a large spike as we did in early 2020, and the 31 to 60 days past due delinquency stood at 0.1%, and the 61 to 90 stood at 0.05%. The annual gross loss index, the AGL, is actually showing a rising trend for the first half of this year. Though it is small in absolute value, the July collection period recorded a 0.40% AGL.
Judging by these trends, one could say that China RMBS has fared quite well in the lockdowns of Shanghai and various cities. What is your outlook on this sector?
I think relative to the early 2020 lockdowns, the performance actually reflects the general preparedness and adjustments that the services made in their operations, having experienced this before. So the asset performance did not see a major spike such as that in early 2020. And of course, the lockdowns did not straddle Chinese New Year, which usually generates quite an increase in delinquencies. However, although the wider regional lockdowns may have had a breather after the Shanghai and various other cities' lockdowns were lifted, but we have seen new lockdowns in various other cities having recently been reported. In the most recent economic forecast that Fitch published on 14th of September, we had lowered our GDP growth forecast for 2022 and 2023 to 2.8% and 4.5% respectively. This reflects a larger than expected decline in GDP in the second quarter this year. A longer and deeper slump is unfolding in the property market, and of course the byproduct of which was the mortgage boycotts that we have seen in the headlines. The recovery in consumer and services-related spending has also been hampered by voluntary social distancing and the lingering public health precautions, and of course the deterioration in global economic outlook. With this as the backdrop, we expect the performance for mortgages to deteriorate in the second half of the year and into 2023.
Can you elaborate more on the mortgage boycotts and any risks and concerns that you're watching?
Yes, we think the recent mortgage boycott may have exacerbated the weak home buying sentiment, but expect that the direct impact on Chinese RMBS performance to be quite limited. Loans on the pre-sold properties can be a substantial portion of RMBS pools, averaging about 20 to 30%, but the exposure to affected loans on unfinished properties is generally quite small, as Chinese RMBS collateral is typically seasoned for 4 to 6 years at transaction closing, meaning that the pre-sold properties are likely to have been finished and delivered by this point. So Fitch's rated RMBS transactions did not actually include any loans with unregistered mortgage rights, which means that all pooled loans were on homes that have no construction performance risks. Properties with no effective mortgages are currently beyond the scope of our Chinese RMBS criteria. We believe that local governments will prioritize project delivery and strengthen their oversight of developers' cash escrow accounts. Banks may also step up to provide liquidity support to ensure timely completion of construction. And we have already seen the announcement of a 200 billion RMB fund set up to help with that effort. But we await more details on how the funds will be utilized. A number of banks have publicly declared that the affected loans are only a negligible share of their mortgage books, alleviating systemic risk concerns. Further attempts to simulate home buying in the second quarter of 2022 included down payment support programs where For example, a borrower can initially put down as little as 5% of the home value and repay the rest within a narrow window. We have also seen two 15 basis point rate cuts in the 5-year LPR. These measures have not been reflected in boosting the Chinese housing market, with our national home price index having seen decreases for about 10 consecutive months. Prices were also increasingly polarized among city tiers. Still, the magnitude of the price drop have actually been quite modest at just 1.8% lower than the peak. Price appreciation has been strong since the start of 2022 in Tier 1 cities only, while Tier 2 and Tier 3 cities have seen moderate drops, validating our understanding that deeper price declines in Tier 3 cities will be more prominent than Tier 1. Home sales continue to contract for more than 12 consecutive months, and for the first 7 months of the year, it fell by 27% compared to a year earlier. There have been some measures to promote home buying by local governments and developers, but there has not yet been any significant credit easing at this point. So all in all, the environment is not very optimistic for a quick recovery, but defaults and delinquencies remain low on an absolute basis, and we think that senior RMBS notes are well positioned and insulated as the credit enhancements are adequate to absorb any upticks in defaults and potential collateral losses.
Another trend that is in hot discussion is that of green securitization. What are your views on that as it relates to China RMBS?
So there has not yet been any green RMBS at the moment, but I think the progression in this direction is inevitable for the development of this asset class in China. So in China, we see green ABS on a growth track with an exponential growth in 2021, and 2022 is set to exceed that of 2021. We have not yet seen green RMBS, but there have been some CMBS completed. We think that RMBS will be a sector along with CMBS for green development, as the Chinese government prioritizes construction of environmentally friendly buildings to meet its climate goals and targets. The PBOC is encouraging Chinese banks to increase their lending to projects that reduce carbon emissions, which will drive banks' search for green assets. So residential mortgage currently takes up about 18.8% of bank lending, indicating that it is a key area for expansion in their green finance activities. We expect Chinese banks to be major holders of RMBS products, and this alignment of interests among governments, regulatory policies, and banks' demand for green assets will for green lending will be an impetus for this for the development in this sector. A lot of work has already been done, but there is more to do. The whole value chain is still developing, from the identification of green assets to the consistency of instrument labeling, the post-issuance disclosures, reporting and monitoring that feeds into ESG frameworks, all needs to be evolved. Clear industry-led standards supplemented by regulatory framework for ESG securitization, along with improved reporting and disclosures, especially for the use of proceeds, are key to preventing misconduct in the market. We will continue to see the industry evolve, the latest being the Chinese PBOC's newly revised Green Bonds Principle published in July 2022. From Fitch's point of view, our rating still assesses credit risk, and the green attributes do not actually affect our credit analysis framework. To date, the green labels have not been drivers of credit quality of the assets and have no impact on our ratings on the related ABS transactions. Fitch does not actually treat mortgage loans secured by energy-efficient properties or with green certificates differently to non-energy efficient ones when rating RMBS globally. But we do recognize that there may be certain green elements which may affect our assumptions about the asset. One example that I can think of is if certain green properties attract a certain buyer profiles that may result in variation in performance from what we have seen historically, then Fitch could implement analytical adjustments depending on the availability of conclusive and granular historical data proving and validating that the differences relative to the cash flow performance of green versus non-green assets in light of regulatory and policy developments.
Thanks, Hilary. I'm sure green securitization will continue to be a major trend in the China securitization market going forward. We've come to the end of the session today. Thanks again for sharing your insights. For more information on China RMBS, please visit us at fitchratings.com. If you have any more questions on the topics we discussed, please send us an email to the address on the screen. Thank you.